Okay, good afternoon, everybody, and welcome to today's webinar, Understanding Financial Fragility and its Impact on the Crypto Market, presented by Next Generation and Pareto Technologies. My name is Erica Figueredo. I'm the marketing specialist here at Next Generation. And before we get into today's discussion, I want to review some housekeeping items, give you some information about Next Generation, and introduce our speakers. So as always, today's session is being recorded for anyone who didn't have a chance to make it live, and for those of you who wish to watch today's session again. So if you are here with us live, welcome. It's good to have you. And with that, everyone joining today's session is going to be automatically muted for the entirety of the session. However, that doesn't mean we don't want to hear from you. So there are a couple of things that I want you guys to take notice of. So if you can find your Zoom control panel located most likely at the bottom of your screen, the two main features I would like you to pay attention to are chat and questions. So if you have any questions, obviously use the questions tab, and all other communication can go into the chat tab. So if you are here with us live, take some time to introduce yourselves via the chat. Let us know your name and why you're here, and anything else that you may find relevant to let us know. So we really want to keep this as engaging as possible. So also feel free to chat amongst yourselves. To tell you a bit about Next Generation. Next Generation is a custodian and administrator for self-directed retirement plans. And these are much like the plans that you would find at any brokerage house, like Fidelity or Charles Schwab. The only difference between us and them being the types of investments that you can hold within your account, within the account. So instead of investing in stocks and bonds and other publicly traded assets, self-directed IRAs, with custodians like Next Generation, give investors the opportunity to hold alternative investments within a tax-advantaged retirement vehicle. So these accounts can provide a hedge against stock market volatility. They allow investors to diversify their retirement portfolio, and they give individuals added control over their investment returns by investing in what they know best. Next Generation is a women-owned business and was established in 2004, and there are currently two main arms of our business. The first is our administrative arm, Next Generation Services, which is also our headquarters located in Roseland, New Jersey. Next Generation Services handles all of the back office administration, record keeping, tax reporting, and transaction support for our client accounts. Next Generation Trust Company, located in Sioux Falls, South Dakota, is a licensed and chartered trust company, which serves as custodian for all of our accounts. So now to give you our very necessary disclaimer on what we don't do. Next Generation is not a bank or fiduciary, so we do not provide any financial, tax, or legal advice. Next Generation also does not endorse, recommend, or review the merits of any investment. So any information provided on today's webinar is for educational purposes only. And if you have any questions about whether or not this strategy would be best suited for you, we always recommend consulting with your trusted advisors. So for today's conversation, we have our co-host, Junaid Ghauri, the Chief Investment Officer of Pareto Technologies. And alongside them, we have our very own Jack Malpass, Next Generation's Business Development Specialist. So I'll give them a moment to introduce themselves and get to know them a little bit better. So let's start with Junaid. Why don't you tell us a bit about yourself?
Hey everyone, great to meet you. So as Erica said, my name is Junaid Ghauri. I'm a computational mathematician by training. And over the last almost 4 years now, I've been running Pareto Technologies. And really, we started off as a proprietary arbitrage firm in our earlier days. And since then, we've evolved quite a bit, but we are a quantitative asset management firm, and we run a few different crypto strategies.
Oh, thank you. And Jack, over to you. Tell us a bit about yourself.
Thank you, Erica. I'm Jack Malpass. I'm one of the business development specialists here at Next Generation. I've been with the company 3 years, almost to the day. And I help educate people on what they can and cannot do within inside of a self-directed IRA. We go over different types of investments that they can do and what they can't do. We're a small fit group, but we specialize in customer service and we'll do whatever we can to help you out with any questions you have. Feel free to reach out to us, and we'll let you know if this is something that can be held in a self-directed IRA.
Cool. Thank you, Jack. So let's get into today's conversation. Jack, I'll hand things back over to you to get the conversation going.
Thank you, Erica. So, Junaid, what is financial fragility?
Absolutely. So, financial fragility is the robustness of a financial system. In other words, what type of impact do financial contagion or long tail risk events have on the stability of markets? I'll just actually pause there.
Okay. So why does financial fragility exist?
So I think financial fragility existing. One of the things I think that we like to keep in mind at Pareto is sort of classifying fragility or parsing it out one degree further. I think our perspective on it is that for traditional financial markets, we think that fragility exists, and actually fragility increases with the forward trajectory of time, whereas with crypto, naturally with some of our strategies, it's the opposite tends to happen. A lot of times we're used to thinking of volatility and synonymizing that with fragility. And being an asset manager that runs strategies on market inefficiencies, we don't agree with that perspective. Our own thesis is that inefficiencies are inherent to any market, but at the end of the day, markets should be robust enough to be able to withstand shocks. While in the current market landscape, we're seeing Bitcoin drawdown with everything else, or rather crypto in general drawdown with the rest of risk-on assets. We do believe that over time, we're going to see less of that happen, and we should see as some of the DeFi markets and some of the non traditional finance oriented parts of crypto, as those grow, the space in general should be more resilient to financial contagion that might be that the traditional markets are susceptible to.
Okay. So how does the crypto fragility differ from traditional financial marketing fragility?
Yeah, so I mean, so one thing is that with TradFi, as we call it in crypto, for traditional finance, TradFi tends to we run essentially net inflationary monetary policies across our current central banking system.
Mm-hmm.
And while there's merit to that to a degree, I mean, once we in the 70s, when we really ended up bifurcating from after Bretton was when we started bifurcating from the gold standard. The thesis there was that, well, we need to be able to support a growing economy, and then just having a commodity represent the economy may not be enough. So creating a mechanism by which it can account for an expanding economy is important. I think that is, while that's true, I do believe that an asset that's issued in fractional reserve, as the U.S. dollar is, also operating as the reserve asset for a country, poses a number of issues that you end up having to deal with. And I do think that in the current day, this is what we're faced with today. In the modern day, I mean, we're seeing rent costs, the cost of financial products like mortgages skyrocket far beyond what wages are able to keep up with. This and many other parts of the economy are sort of a unfortunate consequence of, I think, our sort of post Bretton Woods era financial system that we're in. So the liberalization of the financial markets came with that, massive flaw, I think. Crypto is certainly not a silver bullet. We don't make that claim, and we don't believe that. But we do think that some of these challenges are addressed by crypto. So, for example, we've long held the view, and we put a research paper out on this about how a Bitcoin specifically can even provide sort of a liquidity buffer for central banks. And I won't go into the weeds, in the course of this talk, but we can certainly share that after the call. It has the similar qualities to gold in that, of course, it's a relatively robust store of value.
Sure.
But at the same time, it is also expansionary, in the sense that there's a finite supply, but at the same time, it's fungible, and it's accessible and tradable to a degree where we don't have to worry about, for example, what happened in the early stages of the COVID pandemic, where the LSE and the New York Stock Exchange was quoting two different values for gold simply because of supply chain issues. So, we think that it's a sort of a robust digital version of gold, in a way. Not to say that it replaces these assets, but a central bank also holding, either crypto or exploring that option would be, I think, at least a marginally better decision than just using, a debt-based asset like the US dollar for reserve purposes. And so in that way, crypto fragility differs from financial fragility in that crypto is nascent. So crypto is volatile, but as a network, it's not fragile nearly to the degree that a lot of large institutions think that it is. And we believe that as time passes, as additional institutional services are developed around this, and as a lot of the DeFi space grows around this as well, we will see that change. So we like to remind ourselves of that, especially during these market conditions, that this is all part of the development cycle, the innovation cycle for crypto.
Excellent. Okay. So what is the importance in understanding fragility with respect to the current market conditions?
Yeah, no, certainly. It's really just that, is that, a lot of times I've been hearing these days that, well, here it is, Bitcoin is drawing down, Ethereum, until recently anyway, was drawing down as well, simultaneously, or rather in tandem with other risk-on assets. There's a number of reasons for this. At these stages, some of having been in crypto for quite a bit of time, we've seen these massive market drawdowns happen, and everything seems like it's gloom and doom while it's happening. But really, this is not unheard of in crypto, and part of this has to do with the fact that much of the involvement that happens in the space by investors, initially retail and now even institutional investors, are the engagement in this market is very similar to what it has been in traditional markets. In other words, some of the large institutional asset managers that were involved, in crypto, and particularly, buying out large swaths of Bitcoin and really participating in the market over the last year and a half or so, they were doing so in the same way that they treated risk-on assets in the past, so equities and such. And so, over leverage, asset liability mismatches, and so on and so forth. And so what that's caused is the natural consequence of bubbles being created, deleveraging happening, and so on. And this has only been exacerbated by the fact that the market is still nascent, right? So we saw what happened with Terra Luna recently. Terra, the stablecoin market, is also highly fragmented right now. And when these things happen in crypto, it hits crypto harder, arguably, than it does other risk-on assets. And particularly in crypto, there's no there's no lifeboat, there's no central bank. And so when deleveraging happens, the consequences of that have to manifest. There's no bailouts, none of that. So that's the key point to keep in mind, was that a lot of folks lost money in this process. A lot of folks were disheartened by crypto and what happened, but this is important longer term. It's important because this incentivizes, I think, large organizations to behave more prudently. I think this all creates enough impetus for retail investors to be more cognizant of where they're parking their money and how they're assessing their investment decisions. And then it also actually motivates other institutional investors and large players to tread carefully, because the thing, what happened with Celsius, 3AC, a lot of these larger firms, is possible, and we're seeing now the sort of the effects of that. So empirically, I think people have been forewarned, and I do believe that should create enough motivation for these types of over leveraged phenomenon and maintenance of your balance sheet and so on should be addressed going forward. And I will say, without not with super high conviction, but to a degree, I think that there's this motivation doesn't always, I think, exist within traditional financial markets. What happened in 2008, I think it sometimes communicates a slight conflict of interest to large organizations when you recognize that there is a way that you can be bailed out, that there is sort of a backstop for you. I think being de-incentivized economically to make certain decisions, it doesn't happen, and that can actually be problematic.
So you see a crypto market recovery?
So yes, in short, I think crypto in general, our thesis is it comes down to what are your what timelines are you looking at crypto over? If you're interested largely in holding Bitcoin for making a quick buck, I think it's a gamble, to be honest, because no one has the answer for what Bitcoin's going to be tomorrow. However, if you're looking at this as an investment, a long-term investment particularly, if you're tracking how Bitcoin's performed over the last decade and then some years, I think the data is overwhelmingly obvious that Bitcoin is a robust investment. Year after year, we see the average value of Bitcoin increase, and rightly so. This is not just like arbitrarily increasing. I mean, the scarcity thesis is playing out. Store value thesis has been pretty robust as well, and the mining distributing across the world and not the concentration of it sort of distributing as well. To a degree, that's also playing out as well. So I think with time it will, but this is at the end of the day, it's looking at your Coinbase or your Gemini account or such every day will is not the best way to go. It's just recognizing this is a vehicle, particularly in the context of IRAs and such, holding crypto and then leaving it for some time and really treating it as a sort of store of value is a better approach. And then doing so prudently, not putting your life savings in crypto, but I think that every sensible portfolio should have crypto in it. Yeah.
So with everything we've talked about, is there anything you think we should more know about investing in crypto that we haven't spoken about?
No, that's really it. Is I think the parameters that we normally use to assess investments. I think you just have to kind of reorient yourself when looking at Bitcoin, and we will be putting out a paper on this in the coming month or so about volatility and really understanding what that means. I think once you're able to kind of educate yourself on what is volatility specifically in crypto and how much of that is rooted from nascency rather than market fragility versus inefficiency and so on, it's a bit more eye-opening, and I think that it can allow an investor to make more sensible decisions around it. But that's my 2 cents. Is it's always important, I think, to just be cognizant of some of these factors. It allows for a more informed crypto investor.
Thank you very much for that. I appreciate it, and I hope everybody listening understands a little more now. And I appreciate your time. Thank you so much.
Wonderful. Thank you so much as well for having me. And then Erica, I did actually have a few questions for Jack as well. Should we pause for questions here, or should we? Can I go ahead and ask those?
You can go ahead and ask away. We don't have any questions yet, but obviously okay. To the audience, if you guys do have any questions, please ask. We're here.
Wonderful, thank you so much. Yeah, so Jack, we worked a little bit with self-directed IRAs in the past, but a curiosity, would you mind explaining what exactly a self-directed IRA is?
Sure. The self-directed IRA, next generation self-directed IRA, is different than your regular IRAs in what you can invest in. Okay. In a self-directed IRA, you can only invest in alternative assets. Okay, as opposed to your regular traditional investing with Morgan Stanley's or the Edward Joneses of the world. Their investments are mainly in stocks, bonds, mutual funds. In a self-directed IRA, you can't hold stocks, bonds, and mutual funds. So with what our investments are, anything that's alternative to those investments. So, and we'll get down further down the line. I'll explain more of what the investments are, and so that's the
Wonderful. And Jack, a question on that as well. What, because I know that I know that Next Generation is now providing services around holding crypto in your self-directed IRA. What other non-crypto assets and assets outside of what you mentioned can you hold in a self-directed IRA?
Sure. Self-directed IRAs can hold anything that's not publicly traded on a stock market. So we're talking about real estate, syndications, partnerships, joint ventures, syndications, crypto, of course. You could be a lender. You can do, as long as it's not publicly traded on a stock market. Most of our clients do a lot of real estate investing, such as rentals, but people do precious metals with precious metals is another good one. What am I missing? I'm tongue-tied all of a sudden.
What about like real estate? Is that possible?
Real estate? Oh, pre-IPOs, hedge funds.
Okay.
So those are mainly the major ones. But again, we don't usually say no to any investment until we've taken a look at it. Our compliance team will take a look at every investment to make sure that it is something that can be held in a self-directed IRA. So as long as that's pretty much the gist of what we do here at Next Generation.
And then in terms of that, I guess, what can you not invest in with your self-directed IRA? And then is there anything that's prohibited transactionally?
Sure. Things that you cannot hold in a self-directed IRA, as I stated, anything that's publicly traded on a stock market, life insurance, collectibles such as art, cars, baseball cards, anything that's collectible, S corps, and our favorite one, cannabis.
Awesome.
For now, we'll see what happens with that in the future. But with Next Generation, it cannot be held in a self-directed IRA due to where our charter is being held.
Okay, that makes sense. And then what about what does a process for investing in crypto look like for self-directed IRA through the Next Generation?
Sure. The process is you fill out an application. It takes about 1 to 2 days for the application to be filled out or to be processed. Once your account is open and you receive your account number, you will then work with the transactions team to get your account funded. And what that means is that wherever your qualified retirement money is coming from, whether it's Edward Jones, Fidelity, Morgan Stanley, our transactions team will work with the client to have the money moved, whether it's transferred, rollover, conversion from their financial institution to us. We have no control over how long that takes, but it takes about anywhere from 3 to 5 to 6 business days for that to happen. And then any investment that you're looking to do, we do a compliance on. Make sure that paperwork is good. It's in the name of your IRA and not your own name. I forgot to answer a question about prohibited transactions before. And there are certain things you can and cannot do as far as prohibited transactions. You can't commingle money with family members. You can partner with family members on deals, but you cannot commingle money with ascendants and descendants. Brothers and sisters, you're good to go, but mother, father, any ascendants and descendants is no bueno. So, but that's pretty much, you're looking at it for the timeline. It takes anywhere from, it's a good 4 to 5 weeks from the application, funding, compliance, make your investment. So you're looking at least 4 weeks. So if you're doing something, a hedge fund or a project where hopefully it'll be at least 5 weeks out so you can get it all in time and not be stressing about last minute details or anything like that. So we tell any investor that there's no rushing the process. this is the benefit of for our company and for your IRA that we make sure everything goes smoothly and get it done in a timely process for you. So that's pretty much it, about 4 to 5 weeks on the safe side.
Okay, wonderful. Thanks for answering those questions. Eric, I could pass it back to you here.
Okay. I actually have somewhat of a two-part question myself that will probably be for both Jack and Junaid. So there are several ways, obviously, within a self-directed IRA to actually make the investment. Obviously, we have these umbrella of asset classes, but how the assets are structured are unique to each asset type. So in most cases, there are, a few ways to invest in cryptocurrency. You can obviously invest your money directly by purchasing the coins yourself, or you can use an exchange. But there's also this world of, crypto funds. So maybe we can talk about what that process looks like on either which end. So whether you're working with a self-directed IRA company or whether you're working with a company that does, crypto funds. So Jack, I'll kind of let you touch on the self-directed IRA side first, and then we'll hop over to Junaid to talk about the crypto fund side.
Sure. As far as the fund itself, the investment part of the whole deal is the paperwork itself. The private placement, because it is private placement, the paperwork that would be needed would be private placement memorandum, anything on the investment itself. We would take a look at the fund, make sure that there are no IRS issues with that fund, and that it is something that can be held. Like I said, if the fund has anything to do with cannabis or anything that is not being held, then that's why we do a compliance to make sure that whatever the fund is, that it can be held. And crypto funds can be held, and the necessary paperwork will be followed through, and we take a look at it, and if everything looks good, we go ahead with it. And so that's pretty much, there's the private placement memorandum is the most important part for the funding, and then there's other letters or things down the line that we would need, but anything that the investor would need to sign off on that fund is what we would need for the investor.
Okay. And Junaid, do you maybe want to describe what that may look like once things kind of cross from Next Generation over to the fund itself?
Yeah, absolutely. So in our case, specifically, we advise IRA capital in the form of managed accounts. And so, the way that would work is that, so after it passes over Next Generation, it would be held in custody with a dedicated, individual managed account owned by the LLC of the individual that's setting up the self-directed IRA. And then from that LLC, it passes through a commingled vehicle that we have, but that's still in the umbrella of our Gemini corporate account. So sub account that's owned by the LLC of the individual to Pareto, and then it's run through our strategies there. And then beyond that point, so in our case, for example, Jack, we would have like an advisory client agreement, given that it's a managed account as opposed to a PPM. And then beyond that point, it's in our custody, and of course for self-directed IRAs, the IRS likes for the capital to be at quote unquote arm's length, and so our involvement there is really beneficial for all parties because it actually stays with Pareto rather than the individual. So any of the legal gray area is kind of resolved fairly quickly there. And then we just send out reports on a monthly basis, showing performance on the capital that the investors allocated.
Excellent.
I'm on mute. Thank you. I don't see that we have any questions, but that will conclude today's discussion. So if you would like to get in contact with Jack or Junaid, I pasted their contact information into the chat box. So you can grab their contact info from there. For anyone that is not joining live, watching it again or viewing the on-demand version, we have Jack Malpass. He can be reached at jackm@nextgenerationtrust.com, and his phone number is 973-533-1880, extension 128. And then if you'd like to contact Junaid, his email address is Junaid, and I'll spell that out for you, JUNAID @Pareto, PARETO technologies.com, and he can be reached at 585-376-0767. So with that, thank you everybody for joining today's session, and we hope to see you on the next one. Jack, thank you. Junaid, thank you. It was a wonderful conversation, and have a good day.
Thank you very much for having me.
Thank you, guys.
Take care.